Behaving Wealthy presents the High Worth Shift podcast. Behaving wealthy. Be, have wealth. Who do you have to be to have wealth? The only difference between rich and broke is worthiness. Your behaviors and your habits are a reflection of your feelings of worth. I'm Robin A. Young, and I'm here to give you enough simple rich behaviors to increase your worth, your wealth, and your freedom. In fact, my promise to you is that every rich behavior I share could yield you 3 times richer results, creating your high worth shift. Welcome back to the High Worth Shift podcast. It's Robin A. Young, certified financial planner and CEO of Behaving Wealthy. And I'm so excited that you've chosen to spend your valuable time with me. If you're a parent and a high income earner, then you'll likely not qualify for financial aid for your children's college expenses. Therefore, you must prepay and create your own financial aid. In other words, it's essential that you start college planning as soon as possible. Prepaid financial aid simply means that you're contributing now into college investment vehicles and letting the power of compounding be your assist. Let time work for you. You're working too hard for too little. You need compounding. To maximize compounding, you must start now. With compounding, the more time you have, the more money you have. Too many high-income earners bemoan that they earn too much to qualify for financial aid. Flip that perspective. You earn enough now to set aside money to create your own financial aid. Focus on what you can control. You control how you spend your money. I can tell you, after working with wealthy people and high-income earners for over 23 years, that they agree on one goal. All parents want to help their children have better lives. College planning is a common parental goal that transcends class, race, religion, politics, and yet college planning is one of the least planned goals. Such a paradox. A clear goal, but unclear steps toward achieving that goal. The most important reason to plan for this goal is timing. Think about it. Retirement age for parents and college age for children can occur simultaneously. If you don't plan for both, then one or both goals suffer. Both are known inevitabilities, and yet too many people are not sufficiently prepared for either. In my experience, most parents will prioritize their children's college payments over retirement. To successfully achieve paying for college expenses and retire comfortably, you must plan for it. Therefore, set yourself up to win and start today. Let me briefly address why people wait or avoid sufficient planning for both these predictable goals. The main reason that people procrastinate, it feels like you have time. Both retirement and college goals can seem so far away. People let time get away from them. Life is busy and time flies. The decision to wait because you think you have time is costing you dearly. It's costing you money and it's costing you anxiety. We all know that just because you avoid something doesn't mean you don't worry about it. Instead of worrying about it, do something about it. Do what you can. Whatever you can save for college, that's enough to get started. Plus, you're leaving money on the table, which makes you and your money work harder than it has to work. If you would just do what wealthy people do, wealthy people plan so that they can pay for their goals first. High income earners, on the other hand, often fail to plan using the as soon as defense before they start. As soon as I get my next raise, as soon as I get my next bonus, as soon as I pay off debt, or as soon as, well, isn't it always something? Counterintuitively, you win when you start today with whatever you can, however small, rather than wait until the perfect time or when you have more. I'm here to show you how to get your money working harder for you now. Because if there is one concept that you must understand to have more to show for your hard work, it is this one. Compounding is what you deserve. Compounding works like this. This next hypothetical example will illustrate the magic of compounding. In year one, if you invest $1,000 and it earns 10%, then at the end of the year, you will have an additional $100, which gives you a total of $1,100. Remember that the $100 of interest is all simple interest. In year one, you will always have only simple interest. Compounding starts in year two. The original 1,000 and the new return of 100 is put back to work for you in year two. Let's say you earn another 10% in year two, then your $1,100 will earn $110 of interest, which means your new total at the end of year two is $1,210. Year two's total interest of $110 is made up of $100 of simple interest and $10 of compound interest. Year three's total interest of $121 is made up of $100 of simple interest and $21 of compound interest. Year four's total interest of $133 is made up of $100 of simple interest and $33 of compound interest. Year five's total interest of $146 is made up of $100 of simple interest and $46 of compound interest. You can see the pattern. The largest part of the investment so far is still simple interest. However, that changes in year nine. In year nine, something interesting happens when you break down total interest. That's when compound interest constitutes a bigger portion than simple interest. In year nine, total interest is $214, which is made up of $100 of simple interest and $114 of compound interest. In year 15, total interest is $380, which is made up of $100 of simple interest and $280 of compound interest. In year 20, total interest is $612, which is made up of $100 of simple interest and $512 of compound interest. Can you see the pattern emerging? Over time, compound interest becomes a much bigger part of total interest. It's just astounding how much your money grows with time. To make this happen, you need your money to experience compounding upon compounding upon compounding. In other words, your initial investment makes a return, and your return makes a return, and your return's return makes even more return. It goes on and on for years, for decades. So every year that your money is invested, your interest earns even more. The more time your money is invested, the more compounding your money can experience. Time is the most important driver to get the growth you deserve. To get the magic of exponential growth, you need time. Time is money's best friend. Time is money. Every day, week, month, quarter, or year that you wait, you're leaving money on the table. Instead, do what rich people do. Trust compounding. Believe that you have enough to get started now. It's time to let compounding help you achieve your college planning goal. As you can see, your richer results are on the other side of your college baby step. One more richer result to compounding that you could enjoy with the college planning investment vehicle, the 529, is less taxes. Wait, actually, no taxes. If you're not saving in a 529 for your children's college expenses, then you're paying more in taxes than you have to. Did you know that when 529 compounding earnings are spent on college expenditures, then all compounding earnings are tax exempt? Yes, tax free. Picture this. You contribute $20,000 to your children's 529 and it grows to $100,000. Yes, $80,000 of growth. That's the $100,000 ending value minus what you contributed, the $20,000, is exempt from taxes. This amazing, amazing tool is yours to help your money work harder for you. So when you wait, you leave serious money on the table. Why are you paying the IRS more than you have to? One caveat with 529 plans: the type of plan you choose matters. Don't unknowingly pick the option with higher fees. You want the option with lower fees, which means even more money for you and your kids. If you want to understand 529 plans and their amazing tax saving and other benefits, then text college to 888 85 worth 888 worth 96784. You know I'm always ready when you're ready to hire me to help you. You can have the peace of mind that college expenses are covered while enjoying tax-free growth, all the while your retirement is also on track. There's no need to sacrifice one for the other. These benefits can be yours. All you must do is make time now and start now. Remember that you reap what you sow. Make time to automate this college planning process so that your results are on autopilot as well. So let's see where you stand. Have you left enough money on the table in this area, or are you on track? Today's rich behavior is to assess your prepaid financial aid readiness. For today's 10-minute or less rich behavior, please answer the following 10 readiness questions. Do you have children? Do you plan to pay for your children's college education? Do you have 529 plans for your children? Have you determined what percentage of your children's college expenses you are willing to pay? Do you know how much your children's college expenses are forecasted to be given college inflation expectations? Do you know how much you need in retirement to pay for your living expenses each year? Have you indexed those yearly needed retirement expenses for inflation? Do you know how much you need in your retirement account on the first day of retirement to never run out of money? Do you know how much you need to contribute each year now to achieve your necessary amount needed on the first day of retirement? Do you currently live on more or less than $44,225 per year after taxes? What are your answers to the above 10 questions? Obviously, if you don't have children, then please forward this high worth shift episode to a high income earner that could greatly benefit from it. I thank you in advance. If you do have children and you answered no to 3 or more questions, I can guarantee that you're throwing your money away. In other words, you're paying too much in taxes and you're not maximizing your returns. How important is college planning to you? Are you willing to sacrifice your retirement to pay for college expenses? Remember, you cannot finance retirement. College and retirement don't have to be competing goals. Strike your right balance so that you can save for both. College and retirement freedom are up to you. What you value is shown by how you spend your time and how you spend your money. Align your goals with your actions. Focus on what you can control. Planning to achieve your life and financial goals is within your control. Isn't it time for you to get a little aid? Well, create your aid yourself. For high income earners, you must prepay for financial aid. How? Save now and enjoy the power of compounding to aid in paying for college expenses. Even if you're busy and juggling many obligations, are you curating your one life? Remember, freedom isn't free. Freedom doesn't just happen. You must make it happen. Freedom is a habit created with consistent rich behaviors. If you have 10 minutes, then you can start creating this freedom habit today so that you can do what you want, when you want, with whom you want. It's time to make your move. Take this worthy step today. Now that you know today's rich behavior, it's time to make your move. Tell us when you complete today's rich behavior and what richer results you experience because you took today's baby step. Text 888-85-WORTH, 888-85-96784. We want to know how you are increasing your worth, your wealth, and your freedom. I know you're worth it, and I want you to know you're worth it. Most importantly, I want you to behave like you're worth it. If you loved what you learned today, please be sure to hit the follow button so you never miss a future episode, and leave a review to help me reach even more listeners just like you looking to maximize and turn their hard-earned income into more. The High Worth Shift podcast is created and copywritten in partnership with Robin A. Young and Behaving Wealthy. Be sure to rate, review, and follow the show on Spotify, Apple Podcasts, Google Podcasts, or wherever you get your podcasts. Especially, be sure to rate, review, and follow the podcast if you really liked it. My promise to you is in every episode to give you one rich behavior that can yield you 3 times richer results. That gives you a 300% return on your time spent with me. Remember, richer results are on the other side of today's rich behavior. You are worth more. It's time to make your move.
Make your move. It's time to focus on yourself. Make your move. Baby, don't mind nobody else. Make your move. Do things that make you happier. Yeah. Make your move. Yeah, you can do it, just relax. Hey, baby, and trust yourself. Good things tend to take some time. Remember, you're the one.